are. You'd like to stand that one. And John, are you going to stay there, Johnny?
Here, yeah.
Okay. So let me just introduce to you who we have on our panel right now. Right in the middle, Hind, hi. This is Hind El Gaidi, who is head of Luxembourg for ICG, a UK-listed global alternatives asset manager. They've been active for 30 years in corporate credit and real estate strategies, and currently are looking after more than 80 billion of assets. Hind, very big welcome to you. Can I have a round of applause, please, for Hind? Seated on Hind's left-hand side is a face many members of the private equity community will know. He is the managing director and head of Luxembourg for Apollo Global Management, a US-based high-growth alternative asset manager. Without further ado, I think they all know you already. Can I have a round of applause, please, for Mr. Fabrice Jeusette? And then on our far right-hand end, on my perspective of the panel, we have the managing director and head of Luxembourg for Cinven, responsible for the execution of Cinven Luxembourg investments, together with all of the regulatory and tax compliance aspects of the Cinven activity. A round of applause, please, for Monsieur Gautier Laurent. And finally, before I let John kick off, this is on my left-hand side, Mr. John Holloway. He's sitting on the board of AMUF, lived in Luxembourg for the last 45 years with a big family, but you got a lot of his experience at the European Investment Fund, where he was building up the fund of funds equity investing activity, and he will be moderating this panel. May I have a round of applause, please, for Mr. John Holloway.
Cheers, Jim. Thank you. Good morning, everybody. Thank you, panel. Thank you, LPEA. Being first one up, it gives me a chance to do something that I've not ever had the opportunity to do in the past. I've been watching over the last few weeks the amount of work that the LPEA team has been putting into doing this. And all of us, when we come to conferences, tend to take these things for granted. You turn up, you get your coffee, you have your lunch, you talk to people. You don't see what's gone on behind it to put us in here. LPEA is a very small team, and what they've done, the work here recently, is absolutely staggering. So I'd ask you just to maybe bear that in mind as you go through the day. 6 people have put this together. Amazing. I hope I'm allowed to say that, Klaus and Stefan. Is that okay? Good. I'm all right. Thumbs up. So far, so good. Yes, we've had the introductions. We have the country heads for Luxembourg of 3 major fund management, asset management companies. I tried to find out their AUM to the extent that AUM is helpful in letting us know how big a company is and what it really does. I added together the numbers I could find and came up with, wait for it, 2/3 of €1 trillion they look after. So when you're LPEA, you get the best. You've had the CVs. What I would suggest we do is put our foot on the gas pedal, because we don't have a lot of time, and go through some of the stuff we've rehearsed together. Makes sense, doesn't it? If we'd been sitting here 20 years ago, and I know we wouldn't have been, because we couldn't have been, but if we had been, and we're sitting here today for sure, what have you seen as the main evolution, the main trends in that period? What's really changed for you in your day-to-day work with the theme of operational excellence in mind? Anybody to start?
Ladies first.
Ladies first. Thank you.
Yeah, I wouldn't have been able to be sitting here 20 years ago.
Can we get the mic working, please?
Is it fixed? Can you?
Is it okay now?
No, not yet.
Is mine working?
Yeah,
Do you want me to start?
Yeah, good idea.
Yeah. 20 years ago, is pretty much when Cinven arrived in Luxembourg. Back in the days, I guess that Cinven mainly chose Luxembourg for, let's call it tax reason, and stayed there for that exact reason. Over the last 5 years, the reason why Cinven increase the strength of Luxembourg, deploy more people, more money in Luxembourg, is definitely not the tax reason. Clearly, regulatory helped. Luxembourg is a great place to deploy funds. But more importantly, I think that over the last years, we demonstrate that in Luxembourg, we have the people, we have the mindset to deploy new ways of thinking, new way of operating much quicker than everywhere else. If I take the personal example of Cinven, of course we add the regulatory constraints, the CSSF that brings a lot of new things to do. But in Luxembourg, I think we have the ability to take that from the bright side of things, take that as an opportunity to rethink the operating model. And in the end, what I have seen over the last couple of years is that we have been more agile than our colleagues in London to deploy the operational side of things. We have been probably early adopter of AI. We have been early adopter of new software system. We are agile. Our people here are agile. We have that culture. And that's, for me, the big change over the last 20 years.
So now we're going to try it, yes. I'm not going to speak to ICG only or Cinven only, but maybe looking at the landscape and the market. And what you see in terms of changes, you see evolutionary changes, and that's exactly what Gautier was describing, and you see also revolutionary changes. So on the evolutionary side, GPs, sponsors have grown in size, increased the size of their funds, of their teams, of their tickets, of the way they are deploying their capital, value creation, diversification of the LPs. That's evolution. And then you have the revolution side, where we have new products, new markets, we're going towards new frontiers, right? And in that transformation, I mean, innovation in products usually marries innovation in operational excellence. Because operational excellence is the combination of what you have in terms of processes and technology. So in order to be able to have those secondaries or those open-ended funds for retail, you have to innovate, operationally speaking, to be able to serve that and to deliver on that promise. So that's what we see in those markets being so innovative in products and in markets, but that only can happen if we are able to deliver on that operational excellence. I think that's what to keep in mind as a backdrop.
So on my side, I would just make a summary in between a couple of things. So I think we are all more regulated than before, so it means a lot more work and a lot of more compliance. So that means that if we want to remain profitable and keep our margin, then we need to find a way to do what we were used to do in a better way and with a higher speed. Then some of us have decided to have a multiplication of the products, go from PE to credit to real estate to whatever it is. So we tend to have a lot of different asset class. And so with the asset class sometimes come different instruments, and with some different types of investors come different instruments. So people going into the retail world now, it's a different beast because we need to face some distributors. So it's a new territory whereby it's an additional layer of servicer, additional layer of fees as well, so we need to adapt to that. Also, there is more competition. Private equity, like 30 years ago, was almost no one. Now, everyone is doing private equity.
There's a room full of them.
Exactly. So you have more competition, and so everyone wants to fight, saying, okay, my strategy is better, or whatever it is, or here are my returns. But when there is more competition, it means that this is a more mature market. And so when it is a more mature market, it's time to think about your operational model to ensure that you are still ahead of the curve. So that's what I see.
Okay. Reading the newspapers, I see lots of words ending in shun. So we have internationalization, institutionalization, standardization, democratization, retailization, and not the least of which is regulation. Would you like to try and pick out any two of those and just anyone you like out of that list of shuns and say a few words on it beyond what you have already?
I have a very uncool opinion about it.
Uncool? From you, Hind, that's impossible.
So I think regulation sometimes is also what drives innovation and technology.
Another shun.
And not that we are a big fan of regulation, but we need that to protect investors. Having said that, what the challenge we're facing today in this industry is the cost to comply, because you have layers and layers and layers on regulation, and plus we have more complex products, and the velocity of the deployment is just very high. So the cost to comply can make some products very unattractive nowadays in terms of return. Especially that when regulations comes in, it doesn't make a difference between large or small players. That becomes the new level playing field. So that's why, if we look at it as a way to push innovation or in operational excellence and to push that efficiency, that will be a different way to use that in order to create the new frontier for the operational excellence for sponsors and GPs.
And all these shuns have a cost attached. You just mentioned that as well. What's been the effect on your fee structures? How have you had to modify those to take into account a lot more work than you had to do, or even 10 years ago, 5 years ago? How have you handled that?
I mean, it's a very hot topic. I'm sure everyone has an opinion about it now. Also on costs and recharges, where regulation is pushing us also to disclose what is charged to funds. So, and LPs are pushing in that direction as well. So there is a convergence also between what the LPs need and what the regulation is asking you to do. At the same time, the market is very competitive, so you have to remain attractive. So there are not many answers there, but I'm sure Fabrice has more to say there as well.
I think you wanted to intervene first, right?
No, please go.
Come on, guys, one at a time. Come on. Don't fight.
So I think, again, like regulation shows that this is a business that is successful, because if you are too small, then you are below the radars. So now regulators come at us because we are big enough and mature enough. So this is something that is good in a certain way, and we need this to be sustainable. But how we have to, operate with this is a big question. So a lot of people have got different models. Like, do you keep on internalizing and then building your teams and then finding the talents, or do you try to push it to your service providers? Then the service providers, there is the question of the cost and the reward to do this. Will they produce here? Will they produce in other countries? How do you control the fact that they produce in other countries? And then, comes the GDPR and all those questions around it, and also about the fees. At some point, it's also interesting to see that whether or not our service provider do massively externalize to low-cost countries, we don't see it having an impact on going down on our fees. So I think that it's the whole game whereby everyone wants to have his own piece of the cake, and that makes sense. It means that on our side, we need to be very cautious about what are the things that we consider being high value added that usually you want to keep, or what are the things that are very time consuming that require a very specific expertise for which you don't want to invest in this specific area, and then it's way more convenient and safe to push it out.
How much of your business in this particular activity would you say you insource, and how much is outsourced?
I think we can maybe count the number of people. So if I take the company of Apollo, we got 30 people that we employ directly. And last time I made the count on how many people we use, like FTE of our service providers, it's close to 85.
Okay. Would that be the same, roughly the same percentage pro rata for ICG and for Cinven as well?
I would probably have presented this a little bit differently, because if we are talking about what we do in Luxembourg, the percentage is the same. But I think that what we are doing, our business is massively an outsourcing business. Like, typically, tomorrow I have a deal to close in Germany. Of course, I don't have a team of legal advisor in-house that will help me on this. I don't have the capacity to do full due diligence with whoever I have in-house to do the commercial, the legal, the ESG. I don't have the capacity on the tax side. So Cinven is 250 people, and basically we are able to deploy at short notice in every country, maybe 3, 4, 5 countries at the same time, like an army of advisors. And from this viewpoint, our business is massively outsourced. Historically, what we do in Luxembourg was a different model, much less outsourced than the deal side of things. But we are moving in that direction. Like, we keep in-house the value-added knowledge, and we outsource whatever is the day-to-day, whatever has little added value, whatever is a variable of adjustment for your growth. And just to come back on the fees, because I think it's an important point to note, and I want to link this to one of the buzzwords of today that will be retailization. Because retailization is, well, the next bucket of growth for all of us. This is something that is very new. Some of us already started to do that. Not all, obviously. Cinven did not, for instance. But there is a consensus. Next bucket of growth. When you think about it, retailization, you will have less fees. You will have less fees because you will have intermediation fees to pay. At the same time, you will have a different sort of customer. Your LPs, normally, they are structured. They know what they want. You give them. They are quite good professionals to sort this data, to explain you what they want. The retail investors are different. They value much more the interactions they will have with you. Probably it will be interaction first, return second. And also, they will want different sort of data that are not exactly the one that your LPs want. So you will have to live with that triangulation of it's most costly to deal with the retail market, but at the same time, you do not earn the same fees. And there is only one way to reconcile this, become more efficient.
And are you already fixed up to do that, Gautier?
As I said, we are not yet on retailization.
Thank you, thank you for the very clear answer. Can I come back to one of the shuns, one of my own favourites, because during my time in this business, at the beginning of it, I can remember that the LPs were looking for reporting and valuations. That's what they really wanted from administrators. To that, over the period of time, we've had to add compliance, regulation, and we see it's pretty much non-stop. ESG sort of regulation, SFDR, a young lady called Dora apparently is waiting for us just around the corner. I don't know how many people in the room know anything much about Dora or what it means, but it's coming to a shop near you in the next 2 months, I think. So can we spend a few moments just on this, the R word, what it's actually done, regulation has done for you, for your operations, your interface with LPs and investors? CSSF is not in the room. Please speak for them. This is Chatham House rules, ladies and gentlemen. What happens in Chatham stays in Chatham.
So I think that what happens with LPs is, I mean, from my perspective, maybe less driven by any regulation. It's more driven by the client experience that you want to give them. Again, as I said before, there was way more competition than before. So your investors can, compare the returns. They can compare the shops that they are working with. Like, is it a big company, a small company? And so they expect to have a certain level of reporting and a certain level of consistency among, the reports that they can have from one asset manager to the other. And we've seen the importance of communication. So recently we had our investors meeting for Apollo. It's a big show, and we give a lot of information to them to try to reassure them, and specifically when you are listed, it's super important. And so you can see that a good investor day or a bad investor day can have a massive impact on your own share value. Yep. So this year, just because our investors were considering that all the announcements that we were making in this conference were good news, then the stock price went up by 7% same day.
Really?
Yes.
Wow.
So this is something that wouldn't have happened in the past.
There's one measure of operational excellence.
So I think that this is one of the things that we're trying to focus on is how can you communicate with your investors, not only by the financial reports, not only by paying them a visit sometime, but also doing something that is like super professional, like a very big corporation.
Mm-hmm. Do you think that we're still called the alternative assets industry? Have we outgrown that term? Should we be trying to use something else, getting a new name in the press that people can hang on to, rather than alternative, which might have some strange connotations that not everybody wants to buy into?
I think we use more often nowadays private markets.
Oh, I like that.
by design.
Private markets,
Yeah.
ladies and gentlemen. Alternative is finished, it's private markets.
But to come back maybe to what we mentioned about the LPs and to speak to what Fabrice was mentioning, if I have to summarize it, the way I look at it is that LPs come in for a return and they get out because of service. Meaning that they come in, they have their strategy, there is a portfolio allocation exercise that is going on, and there is a percentage that will go to credits, another percentage to private equity, etc. So within that exercise, they would have selected maybe 5 managers, they will go through the due diligence exercise, and they will review the returns, and they will review the team. Assuming that they are looking, let's say, at the top quartile in terms of managers, so probably we are looking at a very limited interval of returns, which is kind of similar for those managers. So at the end of the day, what they are looking at is the team and the track record and whether they believe in their guts in that team. And typically those CIOs that you speak to from the LP side, they say, well, I defended you in my IC, you better not do something different. So LPs, it's very easy. They tell you, tell me what you're gonna do what you said you're gonna, put it in practice, so say what you're gonna do, make sure that you do it, and report on it. That's the scorecard they look at. You said in the PPM you will be deploying this amount in this strategy in those countries. Please go ahead and do it. Don't do anything else because this is why we invested in you. And then comes the whole conundrum of reportings and whatever you have agreed to in your LPA with them, that you will be disclosing your valuations at Q plus 35 or 45, or that you will be reporting on other things. And those are the standards. But what you try to do in particular is to build that relationship with them, and is to build the intimacy, is that you are transparent in your investor days, in your LPACs, that you mention who are the levers, for instance, that you mention what's happening with the key persons, that you explain to them this asset is actually not performing the way we would have hoped for it, and these are the efforts we are deploying, that you don't keep that for yourself, because then they feel mistrust. Yeah. And that's why they wouldn't deploy again with you or commit again with you in the future. So.
Yeah, sure. Trust is found in teardrops, in size, and is lost in litres. It's absolutely true. Can we stay with the LPs a bit? Not just because I was one for 19 years, but I'm fascinated to hear what you say, because it seems to me that there's common ground. The LPs, in any case, are subject to the same regulation and compliance as you guys. So, do I understand then that the LPs are actually being proactive in this process of meeting the requirements of today's regulatory atmosphere?
I want to come back maybe just quickly to what Gautier, because we speak about LP, but I'm speaking about institutional, and he's right that nowadays we cannot just group them because you have different personas. But
yeah. On your point, really, I think that LPs are more and more focused not only on the what, but on the O. ESG is a good example. This is a segue also with your previous question on how the regulation is helping us. And there is an interesting development I saw about ESG. One of the problem that we will have to resolve in the next cycle is how to make the data more comparable. Like, you have your set of data, I have my set of data. Each LP is asking for a different set of data. This is not efficient. We are trying to provide them as much as we can, saying that, well, we give you everything and you will sort it out. To go back to ESG, this is something which is newer, that people did not know really how to take it. And the associations took an active role there. They came and said, well, let's sit down together and let's try to put a framework.
Sorry, Gautier, just to be clear for the audience, can you say who you mean by associations?
I have two associations in mind. It's the BVCA, the equivalent of LPEA in Great Britain, and the ILPEA, which is the LP association. And those people, they decided to bring their member around the table and say, well, guys, nobody really knows how to take that reporting. And if we want to compare apple to apple, let's agree on the framework of reporting. Well, I think that they both came with framework that are maybe different, but that have at least the merit to try and streamline what is a generally accepted framework of ESG reporting. So this has been created by that dynamic, and I'm talking really about the dynamic because this is what interests me here. That dynamic has been created by the regulation. And to me, if I'm thinking about what is one of the big center of attention for the next decade, I see only two ways to deal with the growing number of data that LP will receive. AI, it's a way. You throw data in a big pot, you put an AI there, and you try to extract whatever you want. And each LPs will design their own form of reporting based on the static data that we put for them.
Are you doing that already? I mean, AI is one of the subjects that everybody hears about every day, but I'm not quite sure personally what stage it's at, to what extent you're using it. Is it replacing most of your analyst team with a machine? Are you getting the results you need in words and figures? Or just could you tell us a little bit about your experiences with the AI thus far?
If you don't mind, I just finished because I was just presenting two alternatives, and then I come back on your question. I'm not trying to avoid it, promise.
Go on then. I know, no way.
That's the option one. Big set of data, AI to sort the data, just to ask question and get the answer easier than when you have like analysts in the basement just digging into the things. Alternative is that we agree on set of reporting. It's not easy because Asian investor will have different reading than US investor will have different reading than Nordic investors. They will not focus on the same thing. However, probably regional association may have a role to play to think about what is the framework that would make sense, not necessarily globally, not necessarily fit for everyone, but that would serve as a base regionally to agree between the LPs and the GPs there.
I mean, it's a both end, right? Because let's just assume you have those standardized templates. You still have, I mean, just the mere fact, the velocity of you have this many products and this many funds that are currently in the market. And nowadays, LPs are just very demanding, right? Anything happens, they want to know what's the impact of inflation on all your portfolio companies and all your funds, or they want to know what's happening in geopolitically, how can it impact. And you have to be so quick in providing that information, those analyses, depending on what's the current situation, that having a set of templates, that's great, but you still have to have the capacity to process it and digest it, and also come with the layer of analytics on top of it, with a story on top of it. So yeah, I think both scenarios can coexist and have to coexist, because we are at the tipping point in the market where each sponsor can go and innovate in terms of technology and be a front runner, but there is a part where, as you say, coming together as an industry, it doesn't even count as a competitive advantage anymore. It's just a necessary thing that we all agree on as an ecosystem. We need it, right?
So you don't have a system where Apollo's AI is better than ICG's AI?
That's one part that we can work on it, because you want to maybe increase your sourcing. But I think there is the minimum, the bare minimum, which is the ecosystem has to align on it, and having that wiring in terms of standardization, in terms of also practices on how to do it. And when I'm thinking about this, I'm thinking about onboarding, custodians, fund administration, accounting, all those parameters and all those tasks actually that we do day in, day out. I don't think any of us can create a competitive advantage out of it, but it's necessary that it's timely, that it's correct, that it's precise, that it's within regulation. So there is an advantage that we all work together in lockstep on delivering on that.
So on my side, I think that everyone is talking about AI all the time because it's the new buzz, and it's going to make a revolution, that's for sure. But again, if we link it to the operational excellence, I think, when we were discussing about this panel before, one of the common ground that we had is to say that usually asset managers would not be the pioneers into this world. Strangely enough, because although we like to take some measurable risk in investment, we're not ready to take risks in other part of the area. And I think that AI is something that you naturally need to develop quickly when you have small margins and when you have a big volume, which up until today was not the case for the private equity industry. So if we look at the operational excellence, I think that on that side, we are always a little bit the followers, which is a good sign because we're not supposed to take those risks, because there's a lot of question mark around how do you manage information, secrecy, all of these things. But I think that we are maybe at a different stage where, as I said before, we've seen a lot of service providers saying, okay, we should go to some other jurisdictions and find a location where we can produce with a lower cost. This is where some of us are now. So we have a huge office in India. And so we've started to put some of the activities in some different countries to be efficient from a cost perspective. Once this will be done and that we can really decrease our own operational cost and master them, then will come the next phase. And by the time that this phase comes, I think AI will be at a certain maturity level, that there will be very less risks for us, and that is going to be the right moment. So although we are all exploring this, and we were all in agreement to say that it's not something that comes from the company who says, okay, we want to put AI, and then it's not coming like top down. It's actually coming bottom up, where you have young people, which is not my case anymore, who say, I would like to do creative things with my computer, and so they have a desire or a need, and this is coming from them as an idea, and then it just has to go up the stair. And most of the time, then we have to say, okay, calm down a little bit, because we need to ensure that what we invest money and time in with regards to AI is something that will really count and not be something that is just buzz and then will disappear. Because what is really a problem is that if you start investing in something and that you actually do not have return for your own operations, and this for the moment is not super certain.
Could I come back on one thing we mentioned right at the very beginning? You just touched on it again there. We live in Luxembourg, very wealthy country, rather expensive place to live and to be. Do you have an issue attracting human talent for those jobs, tasks that you want, that you feel must be carried out here, as opposed to outsourced to India, Portugal, wherever else? How's it going, the recruitment plan? Do you rely on the recruiters to do it? Do you have your own deal flow? How's it work?
Again, I love compromise, so I think it's both. So you do have to attract talent because, speaking from a sponsor perspective, the way I see most of the managers in Luxembourg evolving is you create the hub here with a certain number of talent who are experts. Let's say you will have experts representing different functions that are necessary functions for an AFM to work, right? Yeah. So that's your starting point. Are you going to hire? Are you going to have a bigger model than that? Some did it. We know them. We know them in the market. I think the majority is hovering around maybe between 15 and 30 people. And then you still need more people elsewhere. And then there are the choices of going next to universities or going to countries who are English speakers but not with a different time zone, or actually going to India. So those are all considerations that we, for instance, as ICG, we have also. And you cannot do one or the other. You have to do both. Right. Yep. Now, in Luxembourg in particular, I think we work very hard with the ecosystem, not only to hire talent, but also to make sure that there is talent in our service providers, in our councils, in our accountants, because we need to work together and deliver a certain level of quality. So it's important to have talent in Luxembourg as well. Yeah.
We'll just say a couple of things about this. So I've said it in different panels in the past, but so since I'm in Luxembourg, I hear people say that they cannot hire. Yep. And all the companies saying they couldn't hire are maybe 5 times bigger than what they were in the past. So that's kind of amazing, I think. So is it easy to recruit? No. And should it be easy? No, because I think that if you want to have a good person, that you need to look for a good person, and it takes time. So I think we will. The industry finds always a way to attract talents, and now we have the discussion about do we go in other countries? I think that the regulation is good, because AFM directive tells you that you can have, you can work and operate in different countries in Europe. Yep. Just a question of delegation, oversight, and whatever it is. So at the end of the day, this is helping. because yes, we can go in different countries in Europe. I think it's a mix of everything. And at some point, if we want to say it's like the European market going against or fighting for a certain part of the market with, the US or other continents, then, it's normal not act and think Luxembourg only, but just be a bit broader than that. So I think this is what's slightly happening over time, where people just open locations in different countries in Europe.
Okay. Gautier?
Well, we as Cinven, and it's true for all the relatively boutique type of fund, we are not equipped to recruit young people and to retain them. We are not equipped to train them. So we very much rely on Deloitte, Alternamus, PwC to bring those people, train them, and then come to us. This is unfortunately how it is.
Lovely. I'll take that as blatant publicity then. Okay.
But, in the end, this creates links between us, because whenever you have people working, coming from these firms, then you create a solid link, and you have a better outsourcing of things. So it's both ways. I mean, for PwC, they are losing certain people, but they are creating a strong relationship with people who will then work with them on the long run.
Strange thing happens up here on the screen that you guys can't see. There's a big screen just here. And some time ago, it started off with a number 35 on it in green. It's now got 15 in it, 14, 13 in seconds. So unfortunately, we don't have time for questions, and I'm really very sorry about that, because I think what you've heard is an absolutely brilliant start to today's conference. These guys will be around for part of the day. Please go and hit on them if you want to with any questions you might have on the amazing number of subjects which they've managed to cover in a very, very professional way. So it just remains for me to say thank you to you for listening. I hope you found it great. Please.